Welcome everyone to Vested Interest. This is Shane back for a stock pick of the day video. It is Thursday, the 16th of January. This will be the last one for the week, but don't forget to tune back in for our portfolio update on Sunday morning. And we are going to take a look at US Bank. This is a bank out of the financial sector. Before we get too far in the video, if you could do me a big favor, hit that thumbs up button down below if you find any value in the content. Make sure you're subscribed to the channel. Click that subscribe button down below. Join us on this journey to financial freedom. Join the Vested Interest community. And hit that notification bell so you're notified whenever I put out any new videos. I do this stock pick of the day video series Monday through Thursday whenever the market's open. We take a look at a company stock that's pulled back on the day and see if it is presenting any undervaluation by running it through our screener. So that's what we're going to do. There's some criteria we'll see here in a second. That's what we're going to look at in this video. And there is this thanks button down below for those of you who are interested in helping out the channel, buying me a cup of coffee or tea. I really don't drink coffee, but I do drink tea. And a special thank you to all of you out there, the viewers and the subscribers to the channel. The channel continues to grow because of people like you. And share the videos. If you know anyone who is a dividend growth investor who you think might find some value in the content, make sure you send out the video to them so they can watch and join us as well. Now, this is the Vested Interest Stock Screener. Now, on this one, since it is a financial company, a bank specifically, we are going to take a look at price to book. So we'll add that in. So it must meet 6 of 9. And just because it meets 6 of 9, or if it meets 6 of 9, does not necessarily mean I'm investing. This is just a screener. It just means I'm interested in doing more of a deep dive into the financials of the company. This is a quick way for me to look at a company on a high level to see if there's any interest there in doing more of a deep dive into the financials of the company. And as I say most often on the videos, if you don't know how to or are not interested in doing a deep dive into the financials of the company, looking at stuff like their balance sheet, their debt to income, their income statements, their balance sheet, their debt to equity ratios, assets over liabilities. Do they have more assets than liabilities? Are they paying down debt? Are their margins expanding? Is their revenue growing? All of that plus much, much more. Price to book, PEG ratios, comparing them to other companies in the same sector. If you're not interested in doing that type of deep dive, you should stay away from individual stocks until you are comfortable doing that. Being able to value a business, there's lots of different ways to do that as well. Discounted cash flow analysis is one I use. So until you understand those things that I've just mentioned, if that all sounds like I'm speaking French to you, you should not be investing in individual stocks. But that does not mean you should stay out of the stock market. You can invest into something like an index fund or ETF. Warren Buffett would recommend something that tracks the S&P 500, so something like SPY or VOO. Vanguard dividend ETF there that tracks the S&P 500 is VOO. SPY, I believe, is that Schwab's, or it might not be Schwab, but SPY is another one that tracks the S&P 500, or you could stick to index funds. There are plenty of them out there. Just Google or Bing or whatever search engine you prefer, ETFs, index funds that track the S&P 500, and there are a bunch to choose from. Now we'll jump back over to US Bank. Check them out at their homepage, www.usbank.com. That is www.usbank.com. That is their homepage where I pulled this information from. And they are a bank, just like most banks, probably like the bank that you bank with. Maybe you bank with US Bank. Let me know in the comments down below if you have an account with US Bank. Since the Lincoln administration signed our National Bank Charter number 24 in 1863, that's right, they've been around for a while, we've drawn in on our financial strength to serve customers. This has been especially evident in times of need, such as during the CV-19 pandemic. Our response by the end of 2020 includes a $20 million premium pay program for our employees, relief assistance, and 108,000 small business. You can read the rest of this, but again, they're just like a bank. Most of the banks out there, they own or they offer personal banking, so that's your savings, your checking account, wealth management, that might be your investing account, your brokerage account there, business, so if you run a business, you can have your business account there, same thing, checking and savings, corporate and commercial, and institutional, and that's just large businesses out there as well. So they're just a typical bank like most other banks out there. They have an online service as well as some branches here. You can see we're positioned well for the future, having launched new tools like the US Bank Smart Assistant. I believe that's their online portion, and then to complement our 26 state branch footprints. They're in 26 states, and they have in walk-in locations. Now, the reason we are taking a look at them, down 5.62% on the day. We are talking about US Bancorp, ticker USB. Closed the day at $48.04. Looks like they were down a little bit more in the after hours, at least whenever I pulled this up. 52-week low of $37.81. 52-week high of $53.98. They are not within 15% of a 52-week low. Need to drop a little bit more. I think it was down below $43 or $42 per share. You can do the math. Just take $37.81 times 1.15, and that'll tell you, excuse me, the price it needs to be at or below to be within 15% of a 52-week low. Has a market cap of $74.944 billion, a beta of 1.04, so it is slightly more volatile than the overall market. A price earnings ratio of $14.78, but we don't really use that for banks. We're going to go over to price to book here in a second. That's what you should be looking at for banks. EPS, earnings per share, is sitting at $3.25 per share. Earnings date is coming up April 16th. I believe they may have had an earnings call here recently that they did not do so well on. I believe that's part of the reason for the drop today. Forward dividend is $2. Divide by 4, though. We'll see that here in a little bit. So it looks like about 50 cents per share per quarter. Dividend yield is nice at 3.93% starting dividend yield. Ex-dividend date, December 31st. We're past that. Looks like they paid out on the 15th. Kudos to those of you who just got your dividends. This is not one I own. So you would be in line for their next dividend payout, but you're going to have to wait a few months to get it since they just paid. Excuse me. It's winter, and I didn't think my sinuses would be this bad right now, but they are. Hopefully I'm not getting a cold. But anyways, let's jump over to the right. I like to look. Oh, I'm sorry. 1 year target estimate of $57.01, at least according to Yahoo Finance. So they see it setting a new 52-week high over the next calendar year. And over to the right, I like to look at dividend yield theory to see if the company is potentially presenting any undervaluation currently. To do that, we look at their 5-year dividend yield average, 4.13%. Compare it to their current 3.93%, or over here where it says forward, 3.93%, same number. Since this is lower than their 5-year average, that actually speaks to slight overvaluation on this one, right? They're pretty close, but since it is currently lower, that speaks to undervaluation, at least according to dividend yield theory. Now, I like under 75% for a payout ratio. They're sitting at 60.62, so that is under the 75% I look for there. Let's drop down and look at price to book. For banks, I use 1 as fair value. Anything under 1, undervalued. Anything over 1, overvalued. So their current price to book is at 1.53. That would lead me to believe they are slightly overvalued here. And that's in line with what we're seeing from dividend yield theory here as well. And not only are they currently overvalued, it looks like compared to the last year, they're the most expensive they've been in a while, right? You would have been better off buying them back here in September of 2023 when they were at 1.11%. That's at least close to 1 price to book. But right now, they are the most expensive they've been in the last calendar year. A little longer than the last calendar year. But so according to dividend yield theory, potentially overvalued. Price to book says they're potentially overvalued as well. Again, you'd probably want to run a discounted cash flow analysis on this one, or another way to value a company. There's plenty of them out there. You can look at that as well. Google or Bing or whatever search engine, Ask Jeeves, whatever search engine you want. How do I value companies' stock price? That'll tell you several different ways. And a lot of people are offering free online tools, Excel spreadsheets that kind of help you do that as well. Lots of channels out there. If you want to Google, how to value a company on YouTube, you'll probably find several tutorials where people will help you set up your own spreadsheet. Now, dropping down, I want to look at free cash flow. I like growing free cash flow over time. Typically, if a company has growing free cash flow, they're a healthy company. They can buy back shares. They can reinvest back in the company, make acquisitions. They can pay a dividend, which this one does, and they can grow that dividend over time. So going back to December 2021 here, you can see $9.8 billion in free cash flow. 2021, big jump up to $21.1 billion. December 2023 was down again to 8.4, and looks like the trailing 12 months down further to 6.9. Now they are repurchasing their own shares. Big repurchase here in 2021, 2.8 billion. 2022 was down to 1.1, and it looks like they dropped even more in 2023, down to 62 million. And the trailing 12 months about 68 million. So they are pulling shares out of the market, though it has really slowed down over the last couple of years. Now, StockAnalysis.com is another source I go to for information. I am not affiliated with either Yahoo Finance or StockAnalysis.com, just 2 sources I go to, and I do recommend more than 1 source so you can make sure the information you are getting is accurate and up to date. They do have 20 analysts that have taken a look at this. They call it a consensus buy. I don't know that I agree with that, but that's what they say. Low estimate of $42, which it currently sits above that. This would be, if it dropped to their low of $42, that would represent a 12.58% decrease from where it currently sits. Average estimate of $53.83 would represent a 12.05% increase. That's pretty close to what we saw with Yahoo Finance. A little lower. They had them around 57, so not too far off what Yahoo Finance had them on the previous page. And a high estimate of $65 would represent a 35.3% increase in the stock price. All the while, you could collect that 3+% dividend yield if you were to buy them now. Jumping into statistics here, I like to look at return on equity, return on invested capital, as well as EPS growth, but we'll start with ROE and ROIC. And I like 10% or better for both of these. Return on equity is just above that at 11.03%. They did not list out return on invested capital, ROIC, so I can't tell you whether it is or not. They're saying MA. I mean, it's applicable. They just didn't list it out. EPS, earnings per share, I like over 5%, sitting at 9.40, so above the 5% I look for there. They did not list out revenue growth either. That is not one of the initial screeners, but it is something I look at when I do more of a deep dive. Now, they are a quarterly payer, as we mentioned. Their payout ratio, they're saying 61.44. Yahoo Finance had them in the 60% range, so 60 to 61%, still under the 75% I look for. Dividend growth is slow, but it is growing at 2.59%. 14 years of dividend growth. Buyback yield is negative at negative 1.17%. That tells me that when they are buying back shares, they're not doing it at a very opportune time. Maybe they're overpaying a little bit. I'd like to see that positive, and I also want to see shareholder yield positive at 3.01% as well. Now, this company pays out in the January, April, July, October timeframe, which is off schedule for most companies. So I do like that. Helps build out some of those months that are off schedule. If you have this one in your portfolio, I actually owned US Bank a while back, but sold them for a bit of a profit whenever I sold out of them to move some funds into some other positions that I liked better. And I just haven't looked back at them in a while. So this was one I thought we'd look at, plus the pullback today. Now, going back to June 2022 here, you can see 46 cents per share. They raised that up September 2022 to 48 cents per share. Raised it up again December 2023 to 49 cents per share. And most recent raise was September 2024 to 50 cents. I would anticipate September or December of this year would be the next dividend raise if they're going to continue that trend. And with a 60% payout ratio, I expect them to continue that trend, but you never know. All right, let's check out the screener and see where this one stacks up. Understand the business. It's a bank. If you understand banks, you know, they're a bank, right? Nothing real special or flashy here. Growing free cash flow? No, it's up and down a bit. Growing dividend? It is growing. Slow grower, but it's still growing. So get a check there. Dividend payout ratio is under 75%, so check there. Dividend yield theory says it's actually potentially overvalued. No check there. It is not within 15% of a 52-week low. No check there. Return on equity was good, but return on invested capital was not listed. It's got to beat both to be able to get a check, so no check there. Earnings per share growth was over 5%, and since it's a bank, we're going to look at price to book. It was not under 1. It was at 1.5, so no check there. So it really only gets 4 out of the 6 that it needs. This one does not make it on my watch list. I'll have to keep watching this one and wait for more of a pullback and see if we can find it at a better price point. Let me know if you have US Bank in your portfolio and what you think of the video, what you think of US Bank. Are you a holder of the company, or maybe you're one of the people that was selling out of it? Let me know in the comment section down below. And that's it for this one. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. I do personally read and respond to the comments. I am always interested to read your questions, opinions, or suggestions for future topics. So if you have a company like US Bank you'd like me to cover in the Stock Pick of the Day video series, drop it in the comments section down below. I'll try to work it in on a day it pulls back. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in. Hope you have a great week, and we will see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm sorry, you can read the rest of this, but my voice is starting to go. So appreciate you hanging with me this far.